of swing trading today. Sorry about the communication issues. I lost internet because my foot hit the power cord, which was just barely hanging on. So I'll wait until people rejoin in. Um, so while we're waiting here, let's run a scan, see what's going on out there this week. We're going to be using TrendSpider, folks. 35% discount code below. Automated technical analysis. Do 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 do. All right. Two people. Okay. Hmm. Mm. So we're running a scan here, finding opportunities with stocks that have pierced the lower band of support on the Bollingers. Seymour Rivers, hey brother. Uh, Good to hear. Yeah, I finally got my new power cord in for my microphone. I don't have to rely upon the webcam one, so it's a good way to start off the week. So early before we got cut off, I was talking about demand destruction, and I had people over. And when I talk about demand destruction, I'm talking about the impact that monetary policy is having on consumer demand, and it's a way to fight inflation. And I had a couple of guys over, sitting around having a couple of drinks, and one of them owns a 30-foot boat, and last year he was taking that boat all over. I think he said he spent about $3,800 on fuel last year. And he was taking the boat from, he lives on the North Shore here of Long Island into Manhattan, all around the place, over Connecticut. As a matter of fact, his wife was taking it to work over in Connecticut. She was doing some gig work over there. And this year, the way he's coping with it, he's going to use the same budget. However, he's only going to do short hops around to different harbors locally and not do as much long distance travel. And the same thing was said of the other guy that was there. That basically they're pulling in their reins, right? And unsolicited. This is unbiased, and it's just really a validation of what we're seeing out there. Is that you're seeing people are adjusting their budgets, and it's got to impact the economy because the consumer is pulling in their horns. And these guys make big money. These guys make a lot of money, but they're not going to let it go flying out the window. So expect a slowdown in the economy because if these guys are pulling in their horns and one of them's a big spender, the other one not so much, expect the economy to pull back in. So and I think we're already seeing that. So let's take a quick peek at some of the opportunities we have here. Let's take a look at a weekly chart. Interesting. Excelsius Technologies, lower band of support. I've never looked at this chart before in my life. This support level is not drawn by me. It is the algorithm picking off support levels. So interesting. We broke down below the lower band of support. I don't think this is for me. iCore Holdings, another one. I think that eventually both of these stocks are going to be opportunities. I see more downside for these names. This is interesting. Netty. Broke the weekly support level. I don't like it. Let's go to the larger caps. Do the S&P 500. In this market environment, I'm trying to stick with S&P 500 stocks. I just saw you. Where are you? Let's see what we got. Nothing out there. Odd. Let's do the S&P 1500. I believe we have that here. I don't want to take up too much people's time. We'll do 1500, a much broader search. Kohu popping up again. This is a familiar name. More downside here. Not interested. Not interested. These names are toxic. This is one that, oh, Kohl's. Kohl's, look at this one. This is the third standard deviation Bollinger Band. And you have support right down here, 27.45. So Kohl's is one where we may trade for a rally. Let's create an alert here. I had a couple of alerts that fired off on Friday. NVIDIA, I believe, was one. The semiconductor stocks did not rally with the rest of the market on Friday. So we may see a little bit more downside, especially with the futures the way they are. So what we'll do here is go over the futures in a second. And I mentioned earlier that I was going to do a Monday Night Futures Live last night, but I took a look at the futures action, and I said, you know what, it just doesn't make sense. The futures were ripping up higher on very, very light volume. You knew it because nobody's working. If they are working, they're probably drunk. So I passed, and I said, let's do a morning update, and that's what we're doing this morning. And folks, I am completely not prepared for today. We're doing this ad hoc, so trying to have a little bit of fun here. Daily support. All right, so we'll watch for Kohl's. And what I'll be looking for on names like Kohl's and these names that are really getting pounded away, I want to see if there's a lot of short interest, because if you're going to buy these stocks that are piercing down below the third standard deviation Bollinger Band and you're hitting support level, ideally what you're doing, oh, I'm not sharing my screen. Ideally what you're doing is that you're buying with a lot of short interest out there, and you're playing a short covering rally. Let's go to comments. Sam, our good friend over in Italy. Hello, my friend. Talon, good morning, my friend. Hope you had a great weekend. Tom, yeah, it's good to be back. Yeah, I these 3-day weekends, they seem to be more and more frequent nowadays. If food has issues, GIS and SGM should be good. HRL, I believe that's Hormel, will feed me with bacon in times of drink. Okay. Uh, KSS rejected offer of 50. Take chance. Oh, okay. So this is a takeout play. Okay. Let's see what else we have out there. Health equity. This is going lower. Not interested. Let's overlay weekly support level so I can get a feel for where we might have weekly support on a daily chart. I'm not interested in this. This is going lower. And when I say that this is going lower, you may get a retrace and an attempt to recapture support levels from last week, but ultimately you're probably going to fail. So we're not going to hope and we should fear. ACLS, we talked about this one a few minutes ago. I don't like it here at this weekly support level in dash line. I like it down here. Let's even go a little bit shorter in duration. And we'll keep it active for the week. That's good. Now, moving on to, I want to go to the futures in a second. Moving on to one stock, one of my favorite stocks out there is NVIDIA. Now they're getting pounded because of the slowdown in crypto. Yeah, and here's my alert that fired off on the 1st. Let's bring it up. And you can see that I was looking for a hit at weekly support, and we got that hit. The question is, does it hold? So let's go to the daily chart. We're probably going to tap this again down at around 143, 144 in that range. Where do we close? 145.23. So NVIDIA is going to be one that we're probably going to be involved with. I'm not a day trader. I don't need a 4-minute chart. 30-minute. Yeah, we broke out of this descending wedge formation on Friday. Be careful, though. We've done this before, and ultimately it's been rejected, failed. But NVIDIA is one that I like quite a bit. This is also monthly support that we popped off of last week. My God, I was trading options on this one up in the threes. So this is one that I really like, and we're going to be involved with it. Let's talk about economic data coming out this week, and then we're going to go to the futures action in a moment. We have factory orders coming out today. Wednesday, S&P Global U.S. Services. That's the Purchasing Managers Index. Any read above 50 is a sign of expansion. Any number below 50 is a sign of contraction. ISM Services Index. Job openings. Look at the job quits. I'm wondering if that's going to slow down. We're going to have FOMC minutes on Wednesday. All eyes are going to be on the FOMC minutes. Does the Fed pivot? I wonder how many times the minutes get revised from their last meeting till they're released. I wonder. Call me a skeptic. Thursday, we have initial jobs claims. We get that every week. They're trending up higher. I think they ticked a bit lower last week, I believe. Fact check me on that. And on Friday, oh, we have jobs week this week. Where's the ADP? I guess not sending out ADP this week. Usually when you have non-farm payrolls comes out, you have ADP that's a precursor to it that's released. We're not getting that this week, probably because it's a holiday week. And we have non-farm payrolls coming out on Friday. Watch for average hourly earnings because if it comes in hot, the street's not going to like that. And stocks will probably take a hit because you have inflation on the wage front. Now, God forbid, in this inflationary time, the working man makes an additional buck, but God forbid he does that because the stock market doesn't like that, is sick and perverse as it is. Boiled down 7% pre-market. Leveraged ETF natural gas. Thanks, Talon. We'll take a look at that one. All right, earnings. Do we have earnings trades this week? Definitely not today. Not tomorrow. Not Thursday. No, we don't have any earnings trades this week. Looks like we have some miners that are going to be announcing. We do not trade those on earnings. But I believe it's maybe not next week, the week thereafter, we get the banks coming out. Maybe it is next week. Pepsi comes out on the 12th. Wednesday, earnings really pick up of next week. Delta comes out. That should be interesting. The 14th, Taiwan Semi comes out. Yeah. So next week is going to be big bank week. That's when you get JP Morgan Chase, Morgan Stanley. I think there's another on Friday that comes out. Wells Fargo, BlackRock, Citigroup. Yeah, big bank week next week. So not much happening this week at all on the earnings front. So we don't have any earnings trades. But next week, most certainly, there's going to be a lot of earnings coming out on the big banks. Normally, we'll trade BlackRock, and our strategy is to trade strangles, meaning we sell the deep out of the money call, deep out of the money put, and we look to profit a portion or the entire premium that we're paid. BlackRock, we usually do pretty well with because the implied volatility expands dramatically on BlackRock. Not so much on the other banks. Taiwan Semi doesn't pay that much of a premium, but we'll check it out anyway. Maybe that'll change this week with these semis getting pounded. Schiller PE ratio, we're still very expensive here. Yeah, it's the second consecutive week we're down in the 20 handle on the Schiller PE ratio. But before this is all said and done, meaning we become very, very fairly valued, we need to see the teens on the Schiller PE ratio because the mean is 16.95. Let's take a quick peek at economic data or headline news that can move the market. Yeah, so Europe, they're probably going to punt on raising rates. I'm not looking forward to that news. Europe's in really, really dire straits. The global PMIs, that's the Purchasing Managers Index coming out tomorrow, promise further rates downside. And the yield curve is showing that. I'll show you that in a moment. Nickel prices surge, UK sanctions. Oh, man, the Russians already won that war. All right, let's go to the futures action. All right, there's some wow, they really gave up real estate here. Now we're down about a percentage point on the S&Ps. This is a 1-hour chart. Let's drill down to a 30-minute chart. The NASDAQ 100. A really, really rough night last night. This is bad. How long to the open? Hour and a half. This bar closes at 9 a.m. Eastern time. We're down one spot, 21%. If we close down below this lower band of support, no bueno, man. We have a breakout point failure. It's not letting me edit my. Very bad. The Russell's down nearly 1.25%. We're not seeing a great deal of volume here. But again, another breakout point failure. And what I mean by that is that we had broken out. We broke out here, and now we've given up support. So now we're down nearly 1.33%. Really, this is a 15-minute chart now. Really giving up real estate rapidly. 15-minute RSI is oversold. We're looking at support here on the Russell at around 1698 to, this can go lower. I mean, it can go all the way down here, 1689. So a very wide cushion of support below. Let's pull back, 30-minute chart again. Silver prices held up all night. They're still positive. They were much stronger last night. Holding support, at least they're still green. The same was true with gold earlier, but now we're negative. Holding support. Seymour, do you think SPX can make new 52-week lows today? I doubt it today. It's going to be you're going to have, this is going to be the dog days of summer type trading day. A lot of people are off. So right now, you know, the computers are in charge. They're programmed to keep the market in check while people are out in the Hamptons, hanging out, having lunch over at 75 Main, and we would have to move down below 36.21. So that would be a pretty significant drop. So I don't. You never know. We never want to say no. It can't do it because then it will do it. Because the market has a way of making you very, very humble. But I don't think it's probably going to happen. The probabilities are very much against it. In fact, here's your probability scale. And the probability of closing down below 3680 this week is 20%, just to put things into perspective. So highly probability of not being able to break to new lower lows today. Boyle, Let's take a look at it. Sorry about that noise. Looks like it's off of its lows. Yeah, a little bit of a reversal here off of the third standard deviation Bollinger Band. GDX is, it's very light volume in the pre-market. We're down though, slightly. GDX may be 27, which is my bid. Yeah, could easily do it. Could easily do it. It all depends upon this. Look no further than the dollar, which is ripping up higher. Wow, look at the move on the dollar. This is Europe. This is all because of Europe. I bet you the euro is in free fall right now. Let's take a look. Yep. So if you're wondering why your gold stocks and gold, silver stocks are not doing well, look no further than Europe. No offense to Sam over in Italy. Check out the yen. The yen is up. Excuse me, no, it's actually down. It's actually down, but it's coming off the lows. So yeah, it's the euro that's dragging the gold stocks lower. What a rip on the dollar. We're going up to 106.50 on the Dixie. And remember, last week on the dollar, and this is really something that's worth mentioning, especially now, is that you take a look at the dollar last week, and the dollar broke out ever so slightly above resistance. And it did it on volume. Yeah, so a bit of a fade on the week, but net a strong week. We faded on Thursday and Friday. Good volume on Friday, but a lot of that was selling. We may get a reversal week this week on the dollar. Clark, no, we haven't looked at the VIX yet. We will though. We will. Did you hear that Peter Schiff's bank was taken away due to low reserve? No. Don't tell me that. Euro Pacific? Can you confirm that? I would be in shock. Before we go to the VIX futures, let's take a look at the VIX price action. And wow. That's a shocker. The VIX last week, second retest of the breakout point, very, very threatening. Let's go to the daily chart. Daily chart, very bearish price action on Friday. But, I mentioned last week early on that the daily chart was bearish, weekly chart was bullish, even though it was down. And the question may be why. The why is that we broke out above resistance back here the week of the 13th. We then retested the following week. Then last week we retested again. It held. So while we had two sequential back-to-back down weeks on the VIX, may not have felt like it, but we held the breakout point. So this is not a broken chart. and be wary of the VIX. Now, I'm kind of cheating here in that I know what the VIX futures are probably doing right now, given that equities are falling apart. Dollar really, really strong here. Let's take a look at the CBOE futures on the VIX. I would have thought they would have been up higher, but we are seeing a higher low. So the VIX looking strong this morning. Looks like it may have a good day. And in the back of my mind, I'm thinking about that weekly chart, but the daily chart was pretty bearish. It looks like it wanted more follow through to the downside. So just keep in mind, today's going to be probably a very light volume day. I need to do more analysis about what's going on over in Europe. I think it's credit risk. I work for a precious metal broker, and it's true. Peter Schiff had major banking problems yesterday. Wow. If you guys have a link to anything news-wise, I would love to see it. If you could share that with the audience, that would be great. Thank you. What are yields doing? Yields are pressing up higher. The Bloomberg Commodities Index falling apart. Commodities getting whacked here. They're pricing in recession. Check back in with the euro. Euro is just a train wreck. We're going to see parity with the dollar soon. This is just a basket case. Nugget getting, oh no, this is Tesla. We have a position on Tesla. We're neutral on it. We have an options position, and we're profitable on it. And those options expire this week. We sold the premium. We did not buy the premium, so I really don't care what kind of price action we see on Tesla. Nugget, we have a long position, and that is actually up. I'm in shock right now in the pre-market. I'm going to go like this and knock wood that it's going to buck the U.S. dollar strength. And I believe it did this. It definitely did buck the strength on Friday. I don't expect a long-term correlation with the U.S. dollar. What else are we long of? Netflix. That's down a couple of bucks pre-market. AMZN. I don't think we have a position on an Amazon. That might change. IV percentile, 81%. So Amazon, we may be opening up a position on an options position. I'm not going to buy the common. I'm not going to short the common. S&P is coming off their lows now. This is a 15-minute chart. Let's check back in with the VIX. VIX still strong, coming in a little bit. The dollar, I'm just amazed at. It's not done. We're going up higher. We're going to go to 106.45, 106.50. It's a bit overbought, so expect a bit of backing and filling. It may not be a straight shot up there, but we are a little bit overbought. So if you're looking for an entry point on that GDX trade, watch dollar 106.45, 106.50 on the Dixie, and you may get some bottoming action. The thing is with the gold stocks is that they'll there's an extremely high probability of them going down when the dollar is strong. There is only a good probability of the gold stocks rallying when the dollar is weak. So I don't make the rules. I just live with the consequences. And that's generally the way it goes. Now, RSI on an hourly chart is at 85. So this is overbought. 4-hour chart has more room to go to the upside. The one thing I will point out is that on recent rallies, RSI has been peaking at not significantly lower highs. What was the peak here? 82.50 was the peak here. $83.77. That means this must have been higher. Yeah, we were 84, about a tick higher, a point higher. And then we had a lower high here. Now we have a higher high. So the dollar's going up higher begrudgingly. Let's take a look at some closing price action of the weekly charts last week. Yield curve. We had new monthly lower lows. This is the monthly chart. So the bond market pricing in recession. The 10-year yield is rolling over. Looks like it wants to go lower. It may be higher pre-market. Expect lower lows by the end of the week. TLT, 20-year bond ETF, weekly chart, higher lows RSI. A strong week, but we have a little bit of a topping tail here. A bit of resistance at 117.50. We managed to close above resistance at 115. So probable retest of 115, which was resistance, should now act as support. You could see at 115, a lot of overhead supply there. So let's look for support down there this week. The tip market broke out last week. Bullish key reversal bar on the week. Volume strong. Daily chart. Nice breakout on the week. So these are trades that we're going to look to put on. I'm not going to look to buy the tip. Well, maybe I will look to buy the tips because they're yielding. Last I looked was 6%, maybe lower now. Yeah, it's still yielding 6.78% on the 10-year. So it looks as though a lot of the damage has been done on the tips, and it's safe to go back in the water. The dollar daily chart. Failed breakout. We already went over this chart. VIX, we already went over. Dow transports, a down week. This is our canary in the coal mine for the stock market. And it did not have a good week last week. And this is, honestly, it's an ominous chart. I don't like to say it, but this looks like a bear flag setup. We had broken down here the week of the 6th, attempted to recapture support, failed. We may break as soon as this week on the transports. How do we close Friday? Not a horrible setup here. The thing is with bear markets is that, it looks to be a good setup on a daily chart. If your monthly chart, if your weekly chart isn't in a bull run, meaning you have your indicators, your momentum indicators going in the right direction, price actions going from the lower left to the upper right of your screen. These daily setups, many times they just fail. They're bull traps. So you want to be very, very careful. Now, this looks good. It says a higher low. You think that you're getting ready for a breakout, and it may just happen. But I wouldn't be the least bit surprised to see a failure here. RSI looking really good. The Dow Jones weekly chart, a down week last week, another potential bear flag setup. Stokes double bottom setup looking good, beginning to hook up. RSI W formation forming, higher low put in. Volume last week dropped off. MACD histogram very, very long in the tooth, bullish. S&P's weekly chart down 2.25%. Another potential bear flag setup. MACD very long in the tooth. Let's go to the daily view. Very similar to the Dow Jones, looking for a higher low here and a follow-through breakout. Nice bullish reversal bar on Friday. Volume was light, no great shock ahead of a 3-day weekend. Trip Q's weekly view. Not a pretty chart. But we did have a breakout the week prior. We held support. Volume rose to the downside, double top on the ADX red. I think we're in a short-term bottoming process on equities. Higher low potential on Stokes. Let's take a look at what futures are doing. I mean, the daily setup here is looking okay for equities. So this just may be a light volume sell-off on the day. You know, the 4-hour chart, certainly not looking good. This is the NASDAQ 100. But I wouldn't be the least bit surprised to see a turnaround by the end of the day. I certainly wouldn't go shorting it. Dollar coming in here a little bit, 15-minute chart. Yields pulling back now negative. That's good to see. We have a 2-handle on the 10-year yield. We're back down below 3% on the 10-year. If that doesn't scream recession, I don't know what does. Look for a turnaround here today. Unless you have such horrible credit risk over in Europe, and you start hearing the phrase counterparty risk, who has counterparty risk, then you know you have a problem in the markets, and things are going to get real fast. So it's going to be an interesting day. Yoga Matt, good morning. Bob and Coffee Crew. I may steal that from you. I like that. I have heard about the farmers' strike over in the Netherlands. They're blocking the border between France and the Netherlands. I think they dumped manure on top of government buildings. We don't support that type of behavior here, but I didn't hate it. I don't want the FBI coming to my house. Crazy footage of blockades. Yeah, they shut down farms. They're cutting off food supplies. This is not this is self-destruction. This is everything that's happened in the past 5 years. It didn't happen naturally. We did it to ourselves. When I say ourselves, I'm talking about the Europeans. The G7 has done it all to themselves. This is intentional behavior. Thank you, Bob. I'm the king of this. You got it. All right, folks. VIX spiking up now. It's going to be a volatile day, no doubt about it. I wouldn't be the least bit surprised to see a turnaround. But again, that credit risk over in Europe is a major problem. It's being reflected in the dollar. Let's see if it's being reflected in gold. It is. Even with the gold price of gold down, we're holding 1800 on gold. We were higher last night. We were lower this morning by about $3.20 lower, and we're now bouncing back. So you're seeing gold flat. So you're having a safe haven in the gold. You're seeing the dollar rally. Silver was up. So you're seeing the gold just went positive. So this is more of a fear trade. What you're seeing today, guaranteed, it's going to be Europe. That's the problem. Hey, Bob, they want the farms to be solar farms. No more. These people are absolutely insane. Solar is just not arrived yet. I love solar. I think it's going to be the future, but the technology is just not there yet. I'm reading a book about genetically modified food being the major drivers since the 90s of everything that's happening with Agenda 2030. Stephen M. Drucker. Yeah. Yeah. It probably has something to do with the World Economic Forum. Talent. All right, guys. So we have gold firming up here quite a bit with the dollar still very, very strong. So this is a fear trade that's happening. So it's going to be an interesting day. Commodities may be coming off their lows. This is the Bloomberg Commodity Index. So I would wait until the final hour of trade to pull the trigger on long bets to see whether or not any counter trend intraday rally fades. Yoga Mac, always a gentleman. And with that, everybody have a profitable trading day. Thanks for being here. Hit the like button, please, and I'll talk to you soon. Be well.